continue with the IT story in Infosys in particular. Rumit Duggar of Religare Capital Markets joins us on the phone line. Hi Rumit, afternoon. Are you surprised that the company has not raised their full year constant currency growth guidance of 10 to 12%? And what does it tell you how the second half of the year is going to be for Infosys? Worse than what you were anticipating?
Yeah, so I think it is a negative surprise that despite such a strong first quarter followed by a very strong second quarter, there has been no change in the constant currency guidance. However, that said, I think there is obviously an element of seasonality that we need to factor in. And thus it does look like that second half is going to be weaker, but clearly the quantum of weakness seems much higher than the market anticipated.
All right, Rumit, so for the second half of the year, then what are you factoring in? Give us some numbers now. What exactly are you looking at? Are you expecting a flattish performance? Are you expecting some degrowth? Could you tell us quarter 3, quarter 4? Just a rough range if you could give us.
No, we do think that they should do slightly better than their guidance, which is basically implying a negative 2% to a flat quarter. So we are building in about 1 to 2% kind of growth. Also, you need to consider that there was $23 million sort of a one-time revenue which won't be there. So if you adjust for that, then yes, I think we should still expect 1 to 2% growth.
But that would imply that for the full year, they will beat, their growth will be more than 12% in constant currency terms. What would your estimate be?
Yeah, it would be marginally higher than that.
Okay. What's your exact number on FY16 dollar revenue growth in constant currency and reported as well as EPS?
So for our full year, our EPS number is 57.5 for this year, and we are building in about 9% dollar growth.
And in constant currency?
13%.
Okay.
All right, Rumit, in terms of pricing, just maybe in the last 1.5 months or so, there was a lot of talk that pricing could be under pressure, etc. But that as well has pleasantly surprised. I mean, how do you understand this particular data point? Pricing, is there pressure? Isn't there pressure? Is there something related to fixed pricing that really helped them out this time around? What's your take on that?
See, I think pricing, there is generally pressure on the traditional services, and I think barring this quarter, if you see their realizations have been going down, and I think even for next year there will be some drag because of the residual price declines that you've seen for the last 2 to 3 quarters. So I don't think the pricing in the sector is going up. I think there is an element of mix change, there is an element of revenue productivity which is sort of helping offset the impact. But I think on the traditional side, you're going to see continuous price erosion. Maybe the quantum might be slightly lower.
But the reported pricing went up even in constant currency terms, even in dollar terms.
In this quarter, yes.
Yes.
In this quarter, right?
So what explains that? And is it sustainable?
See, I think there is, as I said, there are two elements. There is an element of productivity and there's an element of revenue mix. So when you look at pricing and you say that it's gone up by 2%, that is on a blended basis. But there will be still certain pockets where pricing would have declined, and there will be certain pockets where they are doing higher value-add businesses, etc., and that there the pricing realizations are much better. So I think you can't paint everything with the same brush and say that pricing has gone up across the board. I think it's more mixed-led and productivity-led.
All right, Rumit, then, if pricing could come under pressure maybe in the second half or so, the margins were particularly good this time around. 25.5%, I was hearing Rima, this morning as well. 25.5%, that would be at the upper end of the band. We had visa costs that were lower, rupee depreciation as well played its part. Were you impressed with that? Do you expect them to maintain that? Or maybe pricing comes under pressure and they fall back to around 24, 23% or so?
So, I mean, there was this one-time revenue, right? So if you remove the impact of that, then margins are still improved, partly helped by the INR. So we expect margins to remain in that 25% kind of band. And I think that incremental growth, they'll continue to invest as the management has been continuously saying, in new areas, in new geographies, in some of these platforms. So I think those investments will continue. So we don't expect a material shift in the margin trajectory.
Okay, one final question. What happens to the stock from here on, Rumit? How do you expect it to move?
I think in the near term, the stock's likely to remain range-bound, but I think over the medium term, the key would be how well they perform in the next couple of quarters and how much earning upgrade they are able to drive. So really, I think you need to see more earning upgrades for the share price performance to pick up from where it is right now.
All right, Rumit, thanks so much for joining in and helping us analyze Infosys stock still under pressure as we speak, but the Nifty as flat as